introduce Mr. Jim White for tax issues at the GAO. Thank you for being here, Mr. White.
Mr. Chairman and members of the subcommittee, I'm pleased to be here to discuss how taxpayers have used the First-Time Homebuyers Tax Credit, as well as the major implementation and compliance challenges faced by IRS. As you know, there are two versions of the credit. The 08 credit was for $7,500 and must be repaid over 15 years in increments of $500. The 09 credit is for $8,000 with no repayment. It was enacted in mid-February of this year and made retroactive to January 1st. We summarized taxpayers' use of the credit in my statement. Table 1 on page 3 shows that over 1.4 million taxpayers claimed either the 08 or 09 credit so far, and that the amount claimed is almost $10 billion. Table 1 also shows the number of claims for each year, but those numbers should be viewed with caution. One reason is that some of the 08 claims will be recoded as 09 claims, either because the 09 credit was made retroactive or because of IRS coding errors. Further, 2009 is not over, and many taxpayers are not expected to claim the 09 credit until they file their tax returns in 2010. So we expect the 2009 numbers to change significantly. Table 2 on page 4 shows the income level of people who claim the credit. Based on claims to date, a clear majority, 59%, of credit claimants had adjusted gross incomes of less than $50,000. Compared to all taxpayers, credit claimants were disproportionately in the income range from $25,000 to $100,000. Because purchasing a home is such a major financial commitment, it is not surprising that people with incomes of less than $25,000 are underrepresented. Those with incomes above $100,000 are underrepresented for a variety of reasons, including income caps on eligibility. Appendix 3 on page 11 shows credit claims by state. There is considerable variation in state claim rates measured as claims per capita. For example, Nevada's claim rate, the highest, is 3 times higher than New York's. Now I want to discuss implementation and enforcement. IRS had to balance quick implementation of the credit with enforcement. Despite having to implement many stimulus-related tax law changes during the filing season, IRS quickly issued the new form for claiming the credit, Form 5405, communicated with taxpayers through a wide variety of media, and made necessary computer programming changes. IRS does face significant challenges ensuring compliance with the credit's complex rules. To determine eligibility, IRS must, among other things, determine that taxpayers have not owned a house in the previous 3 years and verify the closing date of the purchase. IRS must also enforce the 15-year payback provision for the 08 credit, which is important because the amount to be repaid is on the order of $7 billion. And IRS must also enforce the recapture provisions of the 09 credit. One reason compliance is a challenge is that IRS did not require substantiation through supplemental documentation provided by taxpayers or third parties to validate the information on the 5405. IRS officials said they do not have the ability to accept supplemental documentation from taxpayers electronically, so requiring such documentation could cause more paper filing. Further, providing supplemental documentation would be burdensome. IRS has procedures to stop some credit fraud and detect some taxpayer mistakes so they can be corrected before refunds are issued. As a result of the pre-refund checks, IRS froze 110,000 refunds pending audits, identified 167 criminal schemes, and began 115 criminal investigations. IRS is also conducting post-refund audits, but they are done after refunds are issued, making it more difficult to recoup the money. To reduce reliance on costly and burdensome audits, we suggested in a recent report that Congress consider providing IRS with additional legislative authority called math error authority that allows IRS to correct obvious errors on tax returns without an audit. IRS has such authority for some tax provisions, but we identified 2 more related to the home buyer credit where the authority could reduce the need for audits. One is the 2008 payback provision, which could be verified using tax return information. The other is the prohibition on claiming both the 2008 and 09 credit. which could also be verified using tax return information. It is too early to tell whether IRS's enforcement actions and the proposed new math error authorities will be sufficient. Because of the complexity of the credit and the multi-year compliance issues, continued oversight of IRS's enforcement effort is warranted. Mr. Chairman, this concludes my statement. I would be happy to answer questions.
Thank you very much, Mr. White, for your statement. At this